Welcome back. Now, last year, the platinum market produced its strongest annual performance on record, and the price rally has continued into this year, boosted by tightening supply conditions and also robust demand for the critical mineral. Edward Sterck is the Director of Research at the World Platinum Investment Council and joins us with his analysis on the dynamics playing out in the platinum market and how it informs the positive outlook for the industry. Edward, hi, good to chat to you. Welcome to Business Lunch. I mean, today of all days is good to chat to you because that price seems to be climbing and climbing. What's driving this? I know there's uncertainty in the world. There's the Donald Trump and let's go to gold and precious metal safe haven. But what's actually driving this?
Well, look, Ray, I think, well, firstly, thank you for inviting me on to discuss this. But to address your question, I think, the kind of macro political environment is a big feature of this for the precious metals complex as a whole. We're seeing the kind of policies that are being driven by the Trump administration in terms of trade barriers, the kind of the pressure on the Fed's independence and so on, driving a pivot towards hard assets and particularly the monetary metals like gold, silver, and platinum. But on top of that, for platinum specifically, you've got some pretty constructive underlying fundamentals in terms of we've had a number of years of sustained market deficits that have eroded above ground stocks down to unsustainably low levels. And that in effect is helping support a shortage of metal in the physical markets that is helping support prices.
Yeah, there had been concerns about electric vehicles coming onto the market because you don't have these platinum converters. But it doesn't seem to make a difference. EVs are coming, but platinum is sticking.
Yeah, so look, I mean, I think, obviously the trend towards electrification is something that is going to continue. Just putting this into perspective for the platinum market, internal combustion engine catalytic converters are around 40 to 45% of global platinum demand, slightly over 80% of palladium and rhodium demand. So, quite a big component of the demand profile. And electrification is likely to continue. That will gradually erode the demand for automotive end users for platinum over time. But it is happening more slowly than people had anticipated. And certainly some of the policy changes we're seeing in the US, also in Europe, are helpful for longer demand for internal combustion engine exhaust treatment systems and so for the platinum group metals as a whole.
Yeah. Talking about those policy changes and lots of concern about tariffs, are you finding that many platinum producers are getting their platinum, their product, overseas very quickly before the winds change?
I mean, I can't really comment specifically on what the producers are doing, but in terms of the end users, we're definitely seeing the nervousness around these trade restrictions resulting in a significant onshoring of metal into the US. Now, part of that is obviously going to be metal that won't necessarily be visible to the market, but there are certainly some areas where we do have visibility. So if you look at CME bonded warehouse inventories, for example, they're currently running at sort of 380 to 400,000 ounces above normalized levels. And that reflects this concern around, will these critical minerals, including platinum, be tariffed at some point in the future? And so end users are proactively moving metal into the US or have proactively moved metal into the US in order to try and avoid being caught off guard on this. Looking at what's coming up over the next little while, we've got the outcome of the Section 232 investigation in the US into whether critical mineral supply from overseas is a threat to national security. That's actually expected to come out in the next few days. But you've also got an ongoing investigation into allegations of Russian origin palladium being dumped into the US market at below market rates, in an unfair practice sort of way. And that's probably going to drag on until the second half of this year. So there's certainly a lot of news flow that's likely to kind of keep this tension in place and keep North American and specifically US end users, keep them somewhat nervous in terms of the availability of metal in the future.
Yeah. Does this also strike us as becoming a little bit nervous? Because our miners as well, they're smiling, obviously, in Impala Plats and all the rest, but they don't want to get into a situation where the bubble bursts.
No, I think that's a fair concern. Right now, of course, we have seen a significant increase in prices. Prices are unlikely to continue to go up forever. And so, that is a valid concern, as I said. But at the same time, we should recognise this isn't just about platinum or the other PGMs. This is a broad-based price increase across the precious metals complex. We're also seeing it in base metals as well. So this isn't it isn't an isolated spike, if you like. It is, as I said, a broad-based trend. And I think part of that is kind of going back to this concept of perhaps a bit of a change in terms of the way that the US dollar is being viewed as a safe haven reserve currency, and so people are looking for alternatives, and that's a fairly broad-based trend. And it's not just central banks that have been obviously buying gold in quite significant volumes for a number of years now. We're also seeing well-regarded large asset managers, particularly in North America, saying that they're changing the structure of their portfolios away from a sort of 60-40 equity bond structure to a 60-20-20. And that other 20% is gold. And if everyone makes that switch, there simply isn't enough gold. And so, that we will see spillover into the other metals.
It's very interesting because our platinum producers, just a couple of years ago, they were looking at job cuts. They were not on the ropes, but things were looking a bit bleak. Do you see them now perhaps even expanding operations to make hay while the sun shines? Because these are ideal times and conditions.
Look, I mean, higher prices are definitely supportive of supply. I think the ability to flex production to take advantage of the higher prices is inherently somewhat more limited, however, just given that we're typically talking about fairly deep level underground mines. Those are mines just from a sort of geotechnical perspective that are somewhat tricky to flex quickly. So I think, as things stand at the moment, we're likely to see higher prices sustain supply output, and potentially we could see older operations running for longer than they might have otherwise. But I don't really see a huge amount of capability to increase mine supply to capture the higher prices we're seeing at the moment.
Yeah. Oh, it's an interesting time. It really is a very interesting start to 2026. Edward, thank you so much for joining us on Business Lunch. I do appreciate you taking the time. Thank you so much. That was Edward Sterck, Director of Research at the World Platinum Investment Council.